Folks, I wanted to show you what I'm seeing currently, just so you get an idea of what I'm thinking of the markets. Are we extremely oversold? Yes. Did the rally that we had the last day or two, or if you want to call it a rally, the bump that we had, did it really solve anything? Actually, no, and I'll show you what in a moment. Let's start off with the S&P 500 index. This is a declining channel and a perfect parallel one just about, and you can see that since the top on the which was created about by the way, this is an hourly chart. The top, which was just about 33.93 up in this area, was in about a month ago. It's been 4 weeks now. Broke down here with a breakaway gap. We had a 1-2, and we had a bunch of choppy legs down. From an Elliott wave standpoint, it's a little tougher to glean, but I think it's a 1, 2, 3, and this is 4. And maybe we're in the fourth wave consolidation before a fifth wave. And basically, I'm not a happy camper because this rally didn't give me what I wanted, and it also didn't have the breadth and depth of what I normally see at bottoms. Now, did we get oversold enough? Yeah. Did the market show me big negative ticks and a VIX that reached 85, and which is just 12-year highs? And did we get to a McClellan oscillator below 400? Indeed. And so we got some major indicators of a potential bottoming in the market, and yeah, we got a bump today, but I am not happy with this. Usually important bumps start off with big spike ups. Now I saw that in a lot of stocks today. I'm going to show you a bunch of them, but I didn't see it in the market per se. And at the very end of the day, if you take a look at the 5-minute chart, you'll see the market backed off. I thought that this was going to break out through that level and blow into the 25-50 range. Instead, they backed it off. That doesn't mean it can't go tomorrow. I would say that this level right here that I'm drawing a line across these lows is important support on a very, very short-term basis at about 23.80. If we get below that, we're going to either retest the lows or make lower lows. And if you look at a 15-minute chart, hourly chart, whatever you want to look at, you'll see that the down channel is intact until we break up and through, I would say, this level at about 25.50, 55, right through there. We're not reversed yet, and we can still go lower. So the problem is how to gauge this market. Obviously, there's so much negativity in the market and so many reasons why the market could go lower that that people are still selling into every rally. And until that turns around with abandon and with a big thrust to the upside to take out the declining top line and convince everybody that we've made a low, the market may still continue to fall on its own weight, so to speak. With margin calls and with everything else pressuring the market, and with all the negative news that's out there, minute by minute on the coronavirus and for what the government's doing, and all around the world, and with all the shutdowns, and basically the economy's ground to a halt. So there's no way to gauge what the value of stocks are right now. So rather than think about it or guess about it, Wall Street hates not knowing. The number one, indecision and lack of knowledge and the fear of the unknown is what causes markets and stocks to drop. And from right now, it's all a psychological thing in my mind. Now, I saw 30, 40, 50, 100% gains today in certain stocks. It was amazing, coming off what I thought was a low, but I didn't like the close. And until I see the market gap up and blow through resistance tomorrow, I'm not going to be a happy camper, and I'm not going to call for a bottom. NDX, for example, the NASDAQ 100, which I follow religiously, has dropped from 97 something down to 68 something. And we're talking about almost 3,000 points down, about 35, 33%. And until I see this get up across 75.50, I'm not going to call a bottom, because this bottom can still, the market can still fall in a perfect parallel channel down and get down to even 6,600. We could even see something down in that range, down towards 65 or 6,600 before this is over, or lower. Until it reverses, it's going. Look, the trend is your friend. The trend is down, and until that trend changes with a abandon, it's not going to change slowly. It's not going to move up through resistance slowly. That's something that's very rare. Most of the time, you'll get a V bottom, you'll get a retest, and then you'll blow out. There's still some hope for tomorrow. Tomorrow's a big day for me, but the problem is, folks, tomorrow's Friday. And so you got a Friday before a weekend in a market that's declining. There's no reason to stay long over the weekend, is there? So probably tomorrow's going to be either a down day or a retest day. And then we'll see what happens on Monday, Tuesday, which could be a selling climax of great proportions. Now, the way I look at the markets, when you see a negative tick meaning a stock trading down versus stock trading up, 15, 16, 1700, that type of a reading. Until we see that and we see a blowout in the VIX and things of that nature, usually the market isn't showing me a low. A lot of the things that I normally look for, and I've been doing this for 60 years, I'm 73. I've been doing this for a long time, folks, and I've seen a lot of bottoms and tops, and I don't believe this is the bottom yet until I see a conviction thrust, price volume thrust to the upside. The transportation is looking just the same, and I wanted to show you that too. A perfect parallel channel all the way down to the bottom of the channel, and there's a line going across here. If you look at a long-term chart, you'll see that that line here is a major trend line that goes way back to the beginning. This is a 30-year chart, 30 years, and we're at the bottom of that channel. At least the way I've drawn it here. Forget about this. This is what I consider a blow through or a shakeout. The actual channel, if you look at the last 30 years on the transportation, looks like that. Now we've come down to a level which we hit right there back in 2015, 6,400 then, and 64 something now. So either this is a double bottom where it's going to blow and just crush this market. And the one thing I wanted to have you understand that this is the most unusual market I've seen for only one reason. Usually when markets come down, bear markets come down, they come down hard, they bounce, they come down hard, they bounce. There's no bounce. There has been no bounce. Here's your daily chart. I mean, one day bounces. There's not been 2 days in a row in the entire decline where the market was up. Here's the transportation. Here's the S&P. We did have 2 days on that. I remember that back then. But even that was the NASDAQ. The S&P did not. And most of the indices just had 1 day up, 1 day down, 1 day up, a few days down, 1 day up, another couple of days down. And until we see this reverse with a couple of days up and a blow through from declining channel tops and the take out of at least the last high. This double top, or these 2 day, these numbers are 25.53 here and 25.63 there. So that 25.53.60 range is what you want to get through to determine whether or not we really got a technical reversal potentially. You know, what the question comes up, what stocks do you buy? Well, to be quite frank, there's a lot of things you can buy, and there's a lot of charts I want to show you for that took off today. And this is kind of the thing that usually, and I'm not saying buy any of these stocks, but I want you to see the kinds of reversals that we had in certain stocks today. Now, I don't like this company, guess, but when you're up 125% one day on 13 million shares, which is record volume, it's usually a thrust that reverses the trend, and I'm not sure why. I didn't even look at the news on that one. Dave & Buster's. Now, there's a stock that just got wiped completely from 49 to 4, losing 90% in 3 weeks, 3 or 4 weeks. Today, record volume on the upside, almost 10 million shares. The stock was up 76%. EBIX, a company I really follow closely, it's a really good software company, which was trading, you can see up in the 80s and 90s, and most recently it was at 38. Just rolled over like most of the market. There were very little companies that were spared. This one came off the low today and gained 58%. Here's a real good one, Performance Food Group. Not only did it reverse yesterday, leave a tail, but then it followed through with a massive gain of 675, closed at 1817, up 59%. The kind of volume that you see in a sell-off, massive selling climax, followed by that kind of pop, usually means we're going to see a follow-through of some sort. The initial resistance would be 22 on that one, and then we're looking at 26. That kind of a snapback is, these are targets that I would look for at prior highs and at gaps. A few more, just to show you some of the other things that happened. BioMira is a stock that is in the having to do with the coronavirus, and today it just exploded. Now, yesterday after it popped, I told my people to watch for a breakaway, and it certainly gapped after closing at 10:30 this morning. It opened at 16, I kid you not, and then ran to 23. It's a beautiful day trade for us. Now, my site, we do mostly day trades and swing trades. I want to show you the pattern that developed on this for the last 2 days. When a stock explodes like this and then forms a little coil flag or pennant, that's where I'm looking for a low volume ebb, very quiet, narrow trading, and then a breakaway. That's where we first bought it yesterday. at 5.5. And within minutes, the stock went to almost 10. It doubled literally in about 15, 20 minutes. Great trade. Then it went nowhere the rest of the day and then popped this morning. Now here's the best part about this morning. It popped and pulled back, double bottomed and broke out. I didn't do anything with this stock until it broke right there. I saw a double top in here and a little pennant. And when it broke out of that pennant, we went long. It then popped literally from where we put it in at 14.40, and it was trading at 17.40, $3 in minutes. Most of us took profits and it pulled back, but when it held a double bottom, double top, I should say, and then rallied back up again, we went in. Once this pattern broke to the upside, we went long around 16.5. Most of us sold on a quick spike, took it to 19.90, and then a little wedge formed and it broke out again. So some of us traded that too. And I told them basically, look, the stock has gone from five or six up to 23 in about 2 days. So we wanted to take it off the table, and we did. And especially after it broke down and formed a bear flag, a rising bear wedge or so. It was a 1, 2, 3, 4, 5 wave decline to support and another bounce. But this is in showing you this, I'm talking about the kind of patterns that we follow every day, intraday. Arrow mark, take a look at the daily chart on this one. Now, it's a massive reversal. This one was up 41%. How about this move? Papa John's announced that they are deluged with business because obviously people are now ordering online and having stuff delivered. They're not going out. And this company has really benefited from it in 2 days. Yesterday morning, this was 28.5. This afternoon, it was 51. Amazing moves. So when you see these kind of moves, here's Wendy's, same kind of thing. And a lot of these food service companies, they close their restaurants, but they're still doing to-go orders. Uber had an exceptional day today. It got down to yesterday's low at about 13.71 and finished today over 20. So we're getting some massive moves to the upside. You don't see this unless you're seeing major moves. Unless you're seeing major lows usually. Here's a reversal on the housing stock that was up about 33%. Look how many stocks on my list here. We're up 30, 35, 38% or more. I've never seen this many stocks up this much in 1 day. Now it tells me an important low may be at hand. The problem is May is the key word. I can't give you any definitive ideas there. I did put some swings on some of the blasted out stocks. CCL is one. Put it in at the low yesterday. When it came down and bounced a little and pulled back, we put a swing on it, and it's already up about $1.75. And to me, now that they're talking about using cruise ships for hospitals, the government may be renting those cruise ships from this company, may be able to get some revenue out of it. But it's pretty ugly. If you look at this chart, it'll blow you away. How about that for a drop? Literally off a cliff. And what signaled this, when I told my people I saw this bear coil after it broke down, I said, if this cracks, go short. That was at 40. And within 2.5 weeks, it traded down to 790. I mean, incredible stuff. Now today's bounce is an inside day. It's not a massive reversal. And I want to see what kind of follow through we get. Carnival Cruise is going to have to take out 11.55 with volume and then run up to about 15 and 18, which are my swing trade targets. The airline's also getting crushed. Look at Delta. Literally rolled over from 60 to 18, 19. And today it bounced and pulled back, so it's not quite ready yet. But their airlines are in bad shape. I've heard they're 80 to 90% cancellations. Who's going to fly in this market? I cancel my trip to the Traders Expo. I'm not taking that chance, especially my age. The oil sector, talk about a smash. Look at the USO. Now this is an ETF that directly tracks the price of oil. It went from 13 to 4 in a flash and then reversed today. Oil was up about 25% 1 day today. Nice reversal. Maybe I think the key is for oil, I think it got down to 20.5 and today it rallied up to 27 and change. So I think we're at a low on oil, but it may need to retest. Excuse me. So some of the oil stocks that I like are Occidental, OXY, especially now that Icon and a couple other major entrepreneurs have gone and taken big positions. It looks like we have a double bottom down here. I'm looking for a rally back to 14.5 and 18.5, 19. This stock has come down from 49, and any of the oil stocks, a lot of juniors as well. It's pretty ugly what we're seeing out there, but I'll tell you that you don't see this kind of stuff. Let me just show you the one thing that maybe brings it to mind. We follow the ultra short VIX, TVIX, UVXY. Check this out. On February 20th, this thing was 38.90. February 20th. Today's March 19th. From February 20th to March 18th, we hit $1,000 from under 40. That's right, 25-fold increase in 2.5, 3 weeks. I told everybody to sell all your stock at about $9.95, and I said that don't be surprised if you see 500, 600 very quickly. The next day, that's today, this is what happened. It rolled over from, and by the way, on 4 or 5 occasions to try to get to 1,000. Finally, when it rolled over, it plummeted this afternoon to 525. How's that for in half in a day? The UVXY, same thing. We follow that closely. I'd rather trade the UVXY. I think it's got more leverage, and it's a when I say leverage, I'm talking about price-wise. So, you know, I'd rather buy a $40, $50 stock and then have to pay $700 or $800 for a stock. Anyway, that's just me. This one went from, get this, 10 to 140, 14-fold increase. The reversal today was also dramatic, from 130 high to 79. It did bounce a little bit here when the market pulled back at the end of the day. See? And after hours, it's higher too. So I'm looking at the various indicators of the market to tell me what to do here. And right now, the jury's still out, even though I'm optimistic about we've seen a reversal. But is it the reversal? Maybe not. The market was due for a bounce. It certainly got one, but that's all it was. If I see breadth, 3, 5, 10 to 1, advanced declines and up down volume, but today it was 2.5, 3.5 to 1. It wasn't quite the the energy I wanted to see on the upside. That's what I'm concerned about. This is a market that is extremely vulnerable still in my mind, but it could reverse at any moment and have a massive short covering frenzy. So my thinking is now we retest the lows or maybe make lower lows in a 5th wave down and Elliott wave 5th wave, and then blow out to everybody, throw the baby out with the bathwater and clean it up, just flush it out and then turn it around. But the problem is the shutdown is not going to be 2 weeks. It's not going to be 4 weeks. It's probably 2 or 3 months. And until that, so does that mean the market's going to go nowhere for 2 or 3 months? Likely. But since you're at the techtrader.com, if you are, and let me show you a look at my website. And that's me. Here's the trading room. And what's really cool about it, everybody participates and puts comments in and talks about stocks and trades and creates information for everybody. And everybody posts their trades. I'm posting nonstop all day, as you can see. I give information, I give technical readings, I tell people where support and resistance is on things. I'm always, talking about stocks and I bring stocks to light, like Boyd today, 11.14 up 330. That was 42% today. Other stocks that I give out in the morning, I may make comments on nonstop. I just want you guys to know that what I have is this website where I spend an hour and a half every morning. I come in at LA time at 4:15. I'm on until 5:15 doing my work, and then I'm on for another hour with my people doing a live webinar going over what I call my focus list of stocks that I want to trade today. And out of those focus lists of 15 or 20 stocks, I may narrow that down to 6 or 8 stocks that are maybe 10 max of stocks that look like they're good day trades, and give support, resistance, targets, and show you the charts. And then after the market opens, 10 minutes after the market opens, I'm back on with you guys and I'm showing you the early patterns and how they're developing, which may show me some new stuff or eliminate some stocks that look like they might be good trades, but they weren't. Here's a nice comment from one of our subscribers about me and my site, which I thought was very nice. A little testimonial. So, all day, nonstop, all day, you're getting updates, new ideas, comments, news. It's a great place to be. And you can join us for free with no credit card for 2 weeks, no obligation. Just come on in and check it out. I think you'll be pleased. And most people tell me they make enough money in the free 2 weeks to pay for the first year or two. So go to right here, www.thetechtrader.com, and try it free for 15 days. Put your name in, and you're all set to go. And check us out. I think you'll be not only pleased, but I think you'll join us. It's a pretty cool site to be in. Back to the market for just a minute, and then I'm going to take some questions in a couple minutes. So I usually trade every day the stocks that are running, stocks that want to go. Now this morning, and the last 2 days, we've been trading APRN. The Blue Apron is obviously a service that delivers meals that need to just be heated up. They're all ready to go. This stock popped, coiled, broke out, coiled, broke out again, breakaway gap, and then a little gap here. This morning, the interesting part was that when it opened, it didn't open until here, obviously, and right when it opened, it exploded, and that was it for the day. So that's why we have to be awfully careful about pre-market patterns. Now, when it came in this morning, I told everybody that this pattern looked like the stock was going to go higher, and here too. And both times it was a nice little pre-market trade. A lot of people won't trade pre-market, and I don't blame you. It's very vicious and volatile and thin. But look what happened to this one. And I told everybody the stop was right there at 1990. The stock went down to 10 before bouncing. So you got to be, when you're in the techtrader.com, you want to trade with stops. There's no question about that. There are, and believe me when I tell you, when you get a target and you get a stock that goes to a target, take it. Just take it. You cannot be greedy. And I tell everybody in this market, we're trading hit and run trading, meaning I'm in, I'm out. I'm taking a scalp, I'm taking a trade, I'm doing what's necessary. Here's a perfect example of a stock that I liked a lot this morning when it broke out, and it really ran hard. Then it formed a perfect little, what I call a bull coil. And when it broke out there, I put a quick day trade, scalp trade on it at 11, and it went flying to 13.30 for $2.30 in minutes. My target, see this line? That was my target. We just exceeded it by a couple. But when it reached that target, everybody sold, and of course, it sold off sharply. So what I'm doing all day is giving you ideas. I'm giving you support, resistance. I'm showing you trend lines and moving averages and all the things that you want to normally see in a day trade for my tech trader subscribers. So I do want to show you a couple other things. In addition to the indices themselves, I follow 3 groups. Check out the biotech group and see what I was talking about earlier about when stocks go down, they go down a stair step. So you have a chance to either sell or short. This was straight down. And that's why this is one of the most unusual markets I've ever seen. It was such a panic sell on everything. After a 12-year bull market, so many hidden, laid in profits for people that had them for 10, 12 years that, once the proverbial shit hit the fan, so to speak, this market just got crushed and very little chance to get out of the market. There was no mercy on this one, that's for sure. But when you see a devastating drop like that, I'm always looking for reversals. Take a look at the LABU today. This morning, it went vertical and led them right from the get-go and led the market. And the rest of the day, it consolidated. But what I want to see is the LABU biotechs continue leading and get up to the 18 range. When you see 18 tomorrow, if you see it, it could lead to 20, 22, and even 25 or 6. But right now, the potential bottoming pattern on many, many stocks, you look at the big boys, and I'll get to that in a minute because I want to show you the 3 groups. First, LABU, which I showed you, that's biotech. SMH, which is semiconductors. And notice this too got to the declining tops line and backed off. So everything's set up to break out or fail right here. This is where we're at in the market. We bounced off the bottom of the channels where there is support. We went to the top of the channel where there's resistance. We also went to the gap in the SMH, and that backed off. Financials must participate. They didn't do very well today. I'm not happy about the way the banks are looking here. And this is a declining top line. This is kind of an overshoot. But for me, what I'm seeing on this is that. And so until I see a thrust to the upside, it takes out like 21 and a half, 3/4 on the FAS. I'm not calling for any lows. This could easily extend and get down to 13, believe it or not, from where it was at 79 recently, 80. This has gone from 81 to 16. That's financials. That's how bad some of these stocks like Goldman Sachs rolled over. If you look at the daily chart, you'll see what I mean. Look at the rollover at Goldman Sachs, Citibank, JP Morgan, one of my favorites. Nothing was spared. Nothing. So we need the financials to participate in a rally if there's going to be one. And basically that's the story. I believe that the best way to be in this market is be a day trader and a swing trader. And even on swing trades, they're very difficult these days because there's not a trend. The trend is down. Now, I gave a list and I have something called box of shorts. I just want to show you some of my box of shorts that I gave out to my people over the course of the last few weeks. When JP Morgan, that's not the right one. American Airlines was on my list as soon as it broke there. So was CSGS when it broke there. How about Boeing? That was on my list when it broke down and formed a little wedge at 290. Boeing went down to 89 from 290. MAS rolled over hard after it broke and snapped back and failed and came down $42 short, down to 31. Align right. MGPI over and over. We see nothing but this. Look at Dunkin' Donuts. Now let's check this breakdown, a little bear flag right there. 76 down to 38. So many stocks on my list. I actually put a swing short out on this one, 123. It dropped down to 50. GNTX collapsed here, formed a bear wedge. I was a swing short at 27, down to 21, and it's still going down. AAN broke a massive top and a head and shoulder type formation and got crushed. We can go on and on and on, but that's my box of shorts list. Folks, join me at detectrader.com for coverage of the market and individual stocks all day, nonstop, with a bunch of very seasoned, bright traders in the room that will give you ideas, and they will mentor you too. If you're a newbie or somebody who wants to learn more about the market, come on in. They tell me that 2 months in my site is like 2 years in a classroom. And that's it for me today. If you guys have any questions, now's a good time.
All right, Harry, thanks so much. There are a few questions coming in. They were wondering, could you foresee this crash in the market? And if you bought in the SPY at 33.30, what would you do? Where would you stop your trade?
Well, first of all, let me just say this. Trend lines and moving averages are key. When I do my seminars, I always talk about when a stock breaks a trend line. Look at this. This is a no-brainer. I want everyone to see this. You gapped down below the 50-day moving average and the trend line all at once. That was a signal to get out of the market right that day. Now, I don't know what caused that day specifically, but for a couple of days it rolled over, backed off the high. This is the all-time high right there, 339. Then it broke down, and 2 days later it was trading at 323, 325. That was a breakdown. If you didn't sell it then, you must have sold it here. Here's why. Check this out. You have bottoms in here, bottoms in there, and when it broke through that, this one day, that was a breakdown. It tried to rally back, couldn't. It then fell apart. Even then, if you didn't get out of the market and then you saw this pattern develop, which is a bear wedge, came on lower volume. Notice when a stock rallies on lower volume, comes down on heavy volume, it's the exact opposite of what bull trends are. When they go up on big volume, it comes down on low volume. In this case, it came down on heavy volume for 5-6 days and bounced for 2 or 3 days. But it did it on lower volume. Every day, every update came on lower volume. Noted that? That's where you should have said, I'm getting out of the market or I'm going short at 311. Well, it went down to 228. You could have saved yourself 90 points. The question is what to do now. Is that correct, Mark? Mark?
We do have another, yes.
What was the question? What to do now if you had it, or?
Yeah, they were wondering, if they bought around 33.30, what would you do?
If you bought it up there?
Where would you stop? Where would you stop your trade?
Well, my question. No, you're not talking about. You mean 330 up here?
33.30, right? That's what they had said. Well,
if they bought it and they have that much of a loss, there's nothing to do except wait for a bounce. And the bounce would be, I would sell it if you're looking to get out of it around 265.70 range. That's if we get a rally out of this declining channel. But if you took this stock from 330 down to 228, 100 points, then you're not being a disciplined trader. You should never take a stock down 100 points, never. There's no reason for that. If you trade in my room, you're going to get a stop loss on every trade. If you don't take the stop loss, that's on you. Got to be disciplined when you're trading. All it takes is one big loss and you're wiped. Next question.
Yeah, the next question, they were just wondering what's the best time or how do they know when to get into the trade? They said it's easier to look at the chart at the end of the day, but how do they know when to get in?
Well, because I do 1 minute charts intraday, and I'm always watching charts intraday. Okay, I'm always looking at the patterns that are developing intraday. Why? Because I learned after the 2000 crash that I didn't want to be in stocks overnight. And the way to do that is to basically trade intraday patterns. And believe me when I tell you, patterns develop on all time frames, the same patterns develop all day. Even if you want to use a 5 minute chart, it'll tell you where the trend's going. For example, today, intraday, here you don't know where to get in, right? But if I'm day trading and I see the stock break out of an important resistance level, I'm going long. Look at DYAI, it popped and formed a wedge and then exploded. And that's where we bought it right there. If you look at PFGC, anytime you have a stock intraday, if you come into my room, you'll know exactly what I'm talking about. I also wrote a book called Profitable Day and Swing Trading. You can get it on Barnes & Noble or on Amazon.com. I suggest you read it. It's written in layman's terms. It's easy to understand. And it'll tell you a lot about the techniques I've developed over 60 years of trading. Is there any other question?
Yeah, do you have a specific percentage that your stop loss is for stocks?
No. Every time I hear that, it makes me sick. There's no such thing as a percent loss. All that, and I had one of the most amazing traders I ever knew used an 8% stop. I go, why? He says, I don't want to lose more than 8%. I'm thinking to myself, why not just put the stop loss under where support is? For example, just to give an example, I'm just going to use any chart, and that's the one in front of me. If I'm in this stock intraday, and it's channeling like that, where am I putting a stop loss? I'm going to look for where the last pullback low is. I'm going to say, okay, if it keeps trending, let it trend. But if it breaks down under 1685, I'm stopping it. You don't stop by percentage or use a trailing stop. Never. You put a stop under where it's logical, meaning under where support's been broken. If you get down this low, you break the moving average, the trend line, and price support. So under that level, under this zone, you got to stop it. The stock could get killed. And that's on intraday charts as well as daily charts. You can go on a daily chart. There aren't too many daily charts that are trending right now. Okay, but back here, if I was looking at the RADA, two things that came to mind for me, and this is, by the way, a swing trade that we stopped on. When it went underneath 550, right there, and broke down that time, right there at 550, we were stopped out. Okay, a month later, it went down to 2. Now, who wants to ride a stock from 550 to 2? You will not have a trade in my room that doesn't have a stop loss. And the stop loss is based on my technical experience of where support, resistance, moving averages, and trend lines are, and that's where I put the stop. Forget about percent stops, they're stupid. There's no sense in them. They don't make rhyme or reason. The only reason you put a percent loss in is because you're afraid to lose more than a certain percent. That doesn't make any sense to me technically. I'm a technical analyst. I don't follow fundamentals, although when the market is gapping in the morning on a certain stock, I'll look at why the stock's gapping. That's the only time I look at it. The rest of the day, I'm looking strictly at patterns, volume, moving averages, and trend lines. That's all I look at. Any other questions?
There were two things to know: the name of your book and if your subscription fees are on your website.
I think they are, but you can always call and ask. And there's various different levels. If you go to thetechtrader.com and just click on where it says try it free for 15 days. Put your first name, your last name in, your email, and then put in, I forgot what that is. Oh yeah, password. But just sign up for free now. Hit sign up for free now. It'll take you to, this says, unfortunately, I'm already a member. So you can't see it from that. But if you go to thetechtrader.com and the sign up area, and then you'll be in for 2 weeks for free. And I think you'll have a lot of fun and open some eyes. Did I answer your question?
That's perfect.
Okay. Anybody else?
One last question here. What are your thoughts on Tesla?
Interesting day today. Well, first of all, I told everybody, if you bought Tesla, I told everybody when it spiked up and gapped up that day when it reached 968, to sell it, not to short it yet. Wasn't ready for a short. But when this level was taken out right there, and it bounced off to 50, I gave it one more chance. But then this is a no-brainer to me. 1, 2, 3, 4 days. 4 days Tesla held 605. As soon as it broke 6, I said the stock could go down 200 points, and it went down to 300. Went down 250 points to 350. What would I do with it now? Is that the question? Well, today was a good day for Tesla. I told everybody it's a definitely strong day trade potential. Why? Take a look at these two bottoms and this retest there, and then the resistance across this line here. And then when it broke out right there, we took a day trade. And that was about 385. And the damn thing went to 435 for 50 points, then formed a bull wedge right there. And when it broke out, I told everybody else, you can probably trade this to about 450. It went to 452. And then it collapsed at the end of the day. So, that was the question, what would I do with it now? Or I'm unclear what the question was.
Yeah, it was just really kind of just an overview, what your thoughts were. Well,
my thoughts are the stock had a technical bounce. But intraday today, when the stock broke that line and this line right there is where we put a stop on it at 430. It closed at 389, so you saved yourself 40 points on the downside. So you got to be disciplined. Don't even look back, and don't put a mental stop in ever. It's got to be a hard stop. You know why? Because if you don't have a hard stop in, you'll think about it twice, and you may not sell it, and then you'll watch it go down like this did. For example, when Tesla got down here and it broke down, if you were still in it and then you saw this bounce, you say, oh, it's coming back. And then it went sideways and did nothing. It formed what we call a bear coil. If you didn't sell it then, you had a chance to sell it right there. Perfect bear coil. When it broke there, it was all over. It went 421 right down at 385. Not surprised to see that. So Tesla's an in and out stock. Trade it, get you 10, 15, 20 points and say bye-bye. You don't want to be a hero. This is not a time to be long anything for a long period of time until the market tells you that. If Tesla gets back over 450 with some energy, then I'm going long for 600, 700, maybe. I don't know where it goes from there, but my first target is 471, and then 500. Is that it?
All right. It looks like we had one more. What signs are you looking for that the market is in a recovery period?
Well, if you were listening to when you first, if maybe he wasn't here in the beginning. What signs I'm looking for? I look for 3 or 4 different signs. I always look for where the oscillator is, how oversold it was, and we got down to minus 400 according to Tom McClellan. That's historical. The VIX got up to 85. That's historical. The tick got to minus 1550 or 1600. That's not historical, but it's very oversold. So when I see all 3 of those things, I'm looking for a bounce. Now we got one and went right down again because every day there's more negativity. So I can't, until I see the S&P 500 take out 25, 50, 55, right through there, until that line here is taken out. And this declining top line is taken out for starters. Right now, it's really, every single time it gets up near that line, it's backed off, including today. So for starters, let's get up to 24.75 and then take out 25.55. Through that zone, we're on our way back up again. Thank you very much for being here, everybody, and please check out thechecktrader.com and look forward to seeing you on the site. Thanks, everybody.